Good day, everyone. This is your European Open briefing for Thursday, August 18th, 2016. I'm Selena Nicholas, currency analyst at xm.com. So we'll start with the main points that we should look at today. We have a weaker US dollar following the Fed minutes that were out yesterday, which brought the dollar yen to a 7-week low, as the FOMC minutes offered no new insights on future rate hikes. The pound jumped on better than expected UK retail sales data this morning, and the Aussie also had a good rally after an Australian jobs report, and the loonie was a strong performer as oil rises for a 6th day. So let's start with dollar yen. It dipped below the key 100 yen level after the Federal Reserve minutes, before steadying just above this 100 yen level. The minutes gave no clear indication on when the Fed would make its next move, as the members were pretty much split over the timing of the next rate hike. Some preferred to take a more prudent approach, be more patient, and few were prepared to support a rate hike at the last meeting. Just to note, at the last meeting, the Fed left the benchmark interest rate in a range, left it unchanged between 0.25% to 0.5%. Remember, liftoff from near zero rates happened in December. So traders now and investors would probably look to the meeting at Jackson Hole, Wyoming, where Federal Reserve Chair Janet Yellen will be speaking. They'll look to that to see for any clues as to the timing of the next rate hike. So that meeting of global policymakers takes place later this month. Let's take a look at the Australian dollar, as it had quite a big jump early this morning following the publication of Australian jobs data for the month of July, and just over 26,000 jobs were created last month, which brought down the unemployment rate to 5.7%, slightly down from 5.8%. So we saw AUDUSD jump above the key 0.77 level. Let's look at sterling, which jumped higher after the UK retail sales report. They were much better than expected, took cable up to a 2-week high above 1.31. So last month's retail sales figures beat forecasts to come in at 1.4%. So this is much higher than the 0.2% increase that was expected, and it was an improvement obviously from the previous decline of 0.9%. Let's take a look at the Canadian dollar, strong performer in the past few days due to rising oil prices, which took the USD CAD pair down further lower today towards the 1.28 level, as we see oil prices. WTI crude is at a 6-week high, up for a 6th day in a row, above $47 a barrel this morning, and it's been the longest winning streak since April 2015. Helping oil prices higher was a report out yesterday from the Energy Information Administration. The EIA report showed that crude oil inventories dropped by 2.5 million barrels last week, and that was more than the forecast. Actually, an inventory build of 950,000 barrels was expected. So this drop in inventories actually helped oil prices rise higher. So coming up later in the day, we have Eurozone inflation data, CPI, for the month of July, and then in the US session we expect the US jobless claims report. Poll is showing 265,000 claims for last week. So it's only slightly lower than the previous. And then the Philly Fed survey could be interesting to watch as well. So thank you very much for watching and have a great day.